Duke Energy seeks DOE loans for $103 billion grid program. Duke Energy applies for DOE loans to fund $103 billion grid and capacity plan. Duke Energy submitted a federal loan application on May 11th as the first step in securing cheaper financing for a 5-year capital program exceeding $103 billion. The move is designed to reduce interest costs and pass those savings to customers in 6 states experiencing above-average load growth driven partly by data center demand. Duke Energy announced on May 11, 2026, that it had submitted an application to the U.S. Department of Energy, DOE, for loans to support planned infrastructure investments across its service territories in North Carolina, South Carolina, Florida, Indiana, Ohio, and Kentucky. The company did not disclose a specific loan amount, describing the application as the first step in a negotiation over final terms. The goal is to access federal financing at rates below what Duke would pay in conventional capital markets, with interest savings flowing through the rate base to customers under the company's state-regulated utility structure. The announcement came alongside Duke's Q1 2026 earnings release, which showed revenue of $9.1 billion against analyst expectations of $8.49 billion and adjusted EPS of $1.93 against a forecast of $1.86. The company simultaneously outlined a capital plan exceeding $103 billion over 5 years, tied to grid modernization, generation additions, and data center load growth concentrated in its Carolinas and Florida territories. Duke carries approximately $91 billion in total debt, making the cost of capital on that program a material variable in both rate filings and earnings. The DOE application is the third significant cost reduction announcement Duke has made in quick succession. On May 4th, the company finalized 2 initiatives, delivering more than $5 billion in customer savings through the Carolinas Utilities Combination and tax credits, including nuclear and solar production tax credits and investment tax credits expected between 2025 and 2028 in Florida and the Carolinas. The DOE financing extends that strategy into the capital structure of the broader investment program. The application opens negotiations rather than securing approval. The DOE will evaluate eligibility, negotiate loan amounts, interest rates, and conditions, and no timeline was disclosed. Analyst firm Jefferies lowered its Duke price target to $138 from $143 while maintaining a hold rating, flagging elevated financing needs and interest cost sensitivity as the primary risk in the company's capital program. The DOE application, if successful, partially addresses that risk. Duke's stated customer savings are described as potentially billions of dollars, consistent with the scale of the program, but not yet quantified with specificity. You've been listening to Sustainability Soundbites by Environment and Energy Leader. For partnership opportunities, please reach out to our team.